Welcome to your Mortgage Insider update for January 27th. The week of the Fed meeting will be held Tuesday and Wednesday. That will come out 2 days before the Fed's favorite level of inflation, which actually comes out on Friday. So before the Fed meets, markets have really started the day off to the negative side. A lot of new updates on AI. The cost of AI may be a lot cheaper than originally thought. New model coming out of China, really moving markets on the stock side. So that brings stocks down coming into their earnings season. That is really benefiting overall the 10-year Treasury and interest rates in general as we prepare for the Fed meeting. Let's take a look. The 10-year down significantly, 8 basis points at 4.54% as of this morning. That is a far cry improvement from what we've seen over the prior few weeks on this mostly recent AI news. The mortgage-backed security prices are higher, also a positive. We're going to take a look at both of those real briefly this morning. And with the 10-year dropping below the 4.6% level, that puts us in an excellent range from where we had lost this back in mid-December and have held levels above this since right before the Christmas season. So any break lower is really going to be a positive sign. Now, one day does not make a trend, so we do want to see some follow through here over the next few days. We do have a Fed meeting that could move markets. The Fed is not expected to lower interest rates at all. They're expected to stay the same. They're likely going to remain data dependent. And since a lot of that data won't come out till Friday, we could find ourselves in this level throughout this week and potentially Friday, an opportunity to break a little bit lower if we had a really positive inflation reading from PCE, but we could just as easily break back above, which is what we fought with this last few weeks, but the last week with 25-day average. As we switch over to the mortgage-backed security, the price will increase as the cost to the consumer or the interest rate of the consumer comes down. So investors are paying a higher dollar. That premium to the investor nets the consumer a lower interest rate. Similar and only in the opposite respect to the 10-year Treasury, we're breaking above higher. Right now playing with the 50-day average, breaking above the 25-day average this last week. Significant move higher here could portend, as this week progresses here, the Federal Reserve could come out with more dovish comments about their likelihood to still maintain the course in their original plans to cut interest rates 2 times throughout the year 2025. No one's expecting that to be in the short term, but they will become data dependent and each time they go out to speak. So we're going to be battling this 50-day average on the high side. We want to go higher in price, lower in interest rate as we kick off the week. So we'll come back with it next week. Follow this page on YouTube for weekly updates. We'll see if the PCE report can give us a level lower in interest rates as we get again to the second half of the first quarter. Take care.